Thanks for joining us for the executive series. Today I'm talking to Jack Lowenstein, who is the Joint Chief Investment Officer and the Managing Director of Morphic Asset Management. Jack, good to talk to you.
Good to be here. Thanks very much for the time.
Now, just give us an overview of the organisation and your investment philosophy.
Well, Morphic Asset Management's been going since 1912. My founding partner and I, Chad Slater, he and I set up the business when we left Hunter Hall, which to this day was a very successful ethically screened manager. So we're very excited now to be going back into the ethically screened space. But our key focus is global equities with a very tight focus on risk management.
Okay.
As a result, we're up about 17% since we launched, and we've had very, very low volatility. So most of the academic measures of that, like the Sharpe ratio, have been very strong.
That's a good point that you make in relation to returns, because often if you're not terribly oriented to this type of investment vehicle, you might think that the ethical side of things actually constrains the sort of returns that are capable of being generated.
Well, the first thing I want to say is that we believe our job is to get investment returns for our clients, and so we will never sacrifice that goal of getting investment returns in terms of our ethical screen. But to be very clear on this, we think the ethical screen should assist returns. Why do we think that? There's really two main reasons. We're not allowed to invest in fossil fuels, tobacco, gambling, factory farming, deforestation, and other things that are basically negative for the environment. So the reason we think those things are going to be good for investment returns is that, to take fossil fuels, for example, 12.5% of all global warming or greenhouse gases since 1850 have come from 5 companies, the 5 big oil majors. It's an incredible statistic. And our view is that those guys are actually not going to do well in the long term, or even the medium term, because their problem is that a large part of the stock market value of those stocks is the resources they've already proven up and will continue to invest in. But if the global warming scientists will tell you that if those major fossil fuel companies are ever allowed to extract more than 20% of their current resources, we're captives. Global warming will reach a point from which you can't recover. So if you believe that, and we certainly do, because we believe in science, then those stocks are probably overvalued. So not holding them is going to help your investment returns. I took another sector like tobacco companies, which many people said, we're smart, we're investing in sin companies. Our view is they're completely missing cause and effect. The only reason those stocks did well because they had high dividend yields in an era where bond yields were falling.
Very low, yeah.
Now we think bond yields are picking up. Those stocks will probably do less well. So we expect people to get returns, better returns, from investing with us in an ethical screen.
Okay, and so on a similar theme, sometimes when it comes to closed-end funds or LICs, there can be a bit of a disconnect between the underlying share price and the asset value of the fund itself. Why don't you talk to that point?
Yeah, I'm very happy to talk to that. I mean, I think the first thing is, at listing there obviously is a little bit of a discount in the head stock price, but we're issuing a one-for-one option to go with it, so we believe that should compensate for that. So the total value of the package should be in line with what people pay for it, or a bit better. In our view, the great thing about a listed investment company is that we as a manager are totally aligned with the investors, because we get all our business gains, if you like, from growing the underlying value of that share. The other thing we've got to do, we've got to form a community with our investors, and our great friend Jeff Wilson, who is helping us with this launch. The reason why Jeff Wilson has such great returns for his investors is because he narrows that discount by forming a community with investors. And we intend to do the same. We'll be having meetings every 6 months in all major cities to try and get that community effect going.
And what about the team that you're going to have managing the assets?
Okay, well, so the core of the team is 4 of us, plus some very gifted young analysts. The 4 key men or key people, I should say, are Chad Slater, my partner from Hunter Hall originally, and he set the business up with me. Our first recruit was a gentleman called Jeff Wood, who is our head of risk and macro, and he's been one of the guys who's really taken a very, very important role in keeping our volatility down so our investors don't have too many sleepless nights. And then James Taylor is our head of research. So we've got 4 key people, and the way we work is we basically say we're all responsible adults. Chad and I have veto rights over every other person in the portfolio, including each other. But generally, we try and operate in a position, a function of high trust. And if somebody has an idea, we assume it's going to be good. And our risk management process ensures that if there's any problem or anything, we cut it quickly.
And Jack, another important aspect of aligning your interests with investors' interests is you're going to have skin in the game. Speak more about that.
Absolutely. I mean, we're 1/3 owned by Westpac, if I'm allowed to say that on here. And Westpac is going to be putting $5 million of its balance sheet into our fund. Jeff Wilson, who's helping us with distribution, is going to put $1.1 million of his money into the fund. I myself am putting $500,000 into the fund, and all the rest of our board. We have a very strong non-executive board. They're all putting money in as well. So there's going to be strong skin in the game, and many of my colleagues at Morphic are going to put money in as well.
Okay, and another important aspect of things is that time taken to get the critical mass within the portfolio. How long do you anticipate before you'll be fully invested?
It'll be very quick. And the reason for that is this is going to be an ethically screened version of the unit trust we currently run, the Morphic Global Opportunities Fund. Now, at present, every stock in the Morphic Global Opportunities Fund meets our screen to go through into the Morphic Ethical Equities Fund. So we should be able to invest that money very quickly if we choose to do so. Obviously, a lot will depend on market conditions at the time in terms of how fully invested we get, how quickly, but we have absolutely no problem getting invested quickly from a research point of view.
And for more information about Morphic Ethical Equities investments, please visit the website with the link shown here below. Jack, great talking to you.
It's been great to be here.
And thank you for joining us for the Executive Series.